Hi, I'm Pattu from FreeFinCal, and let's discuss what should we do if the market crashes tomorrow. So this is a question and a problem that is troubling many investors. Well, this has been troubling many investors for a long time. They've been saying the crash will come tomorrow, crash will come tomorrow, and so on for the last, I don't know, 5-6 years, I don't know. So the crash might come tomorrow, and what should you do? What should I do? What will I do? What will I do? Nothing. I will do nothing. Absolutely nothing. I don't need to do anything. I just did my financial audit. You may have seen that in another video. And my goals are more or less robust, in a robust place, and I don't need to do anything. And you don't need to do anything if you have just started investing. Most of you who are going to see this video, most of the people who are investing in the mutual funds are people who just started last few years. And as long as you do not need the money for the next 10 years, 15 years, 20 years, why do you care? If the market's going to crash tomorrow, let it crash. If you have extra money, put it in. If you don't have extra money, don't worry about it. It means nothing. Why do you have to worry about this problem? But there are people who have also started investing in equity because they wanted money 2 years later, 3 years later, 4 years later. And those people should, whether the market crashes tomorrow or not, if you need the money within the next 5 years, get out now. Just get out now. Even if your returns are zero or negative, just get out now. Because it's too risky. Don't put too much of money in equity for any goal that's less than 5 years. For any goal between 5 to 10 years, have about 20-30% exposure in equity. That's all. That's all. Don't put too much money in equity. Yeah. So those people should react. They should react regardless of whether the market is going to crash or not. So why is this fear about market crash? I don't understand this at all. This is like the fear of the Yeti or some monster. We'll say there's one monster. People will say in the olden days in the village, they'll say don't go to into the forest at night because there'll be some big monster that will come and take the children away. Market crash is like that monster. That's a fear that we have. It's a sum of all fears that we have in our minds. Well, the markets will do what markets will do. We have no control. We do not know what's going to happen. All we can do is control what we can control. And if we can control if we know exactly when we need the money, if we have the correct asset allocation, the right return expectations, rebalance our portfolio every year, and have understand what that money actually is worth. Suppose you have 1 lakh today. What is that 1 lakh today worth? Is it 10% of your target corpus, 15% of your target corpus? What is it worth? So if you have that kind of perspective, and if you look at those things, those are the things that are in your control. Worry about them. Don't worry about what the market will do. If you want to time the market, you will not be asking are we in a bear market, bull market, when will the market crash, what should happen when the oil price is going down, will the market crash, will the census crash on global cues, as the media calls it? Oh, bullshit. Please don't do that. If you want to time the market, do it with technical indicators. Technical indicators don't look at any news. They do not look at opinions. They do not speculate. They just math. Use math and time the market. But time in the market means not investing on dips. That's stupid. That's immature. Immature people invest on dips. There's no use about it of investing on dips. I've shown that. Timing the market means when the market is overvalued, you pull out money, and when the market is undervalued, according to your technical indicator, you put back money in. That's timing the market. If you are worried about market movements, time the market. Then you will reduce risk and maybe if you are lucky, enhance a little bit of returns. But don't sit and speculate and start following some people on Twitter or some people on Facebook and say, oh, this guy said that guy said that, what's going to happen, and bite your nails and lose your sleep and let your hair grow white. Don't do that. Focus. Investing is important. So what if the market crashes tomorrow? Nothing. You don't have to do a thing. I'm not going to do anything because there's no need for me. My finances are in a reasonably safe place, and yours will be too if you invest with the right asset allocation for the right goal. If you did that, so do that and don't worry about what the market's going to do. I'll catch you.